Hey everyone, welcome back to the channel. Today we're diving deep into Bigbear.Ai Holdings Inc., ticker symbol BBAI, which just wrapped up the week with some wild market action and even bigger questions about where this AI defense stock is heading next. The New York Stock Exchange is closed for the weekend, but the conversation around Bigbear.Ai definitely isn't. So let's start with the basics. Bigbear.ai closed out trading on Friday, October 17, 2025 at $7.42 per share, down 3.64% for the day, losing about 0.28 from its previous close. Over 127 million shares changed hands during that session. That's an enormous amount of activity, right in line with what we've seen from this stock's explosive trading rhythm over the past few months. At first glance, that drop might look discouraging, but if you peel back the layers, there's a lot more going on here. While retail traders were buzzing about Big Bear's latest defense headlines, institutional investors were quietly rotating capital into Palantir, Big Bear's biggest rival in the AI data intelligence space. This kind of shift suggests something interesting. The big money might be looking for companies that are closer to profitability rather than ones still burning heavy cash in their growth phase. Now, if you followed Bigbear.ai for a while, you already know that most of the hype around this company is built on its ties to the US government and its position in the expanding AI-driven defense sector. The common belief among retail investors is that BBAI is a pure-play defense tech stock ready to secure billion-dollar government contracts. That narrative got even louder after the company announced its partnership with Sheikh & Inc., where both are collaborating to deliver AI-powered edge infrastructure designed for battlefield operations. Earlier this year, BBAI even showcased its technology to the U.S. Navy, reinforcing the idea that it's becoming a serious defense player. That wave of optimism pushed the stock to a 52-week high of $10.36 back in February 2025. Since then, anytime there's been a new contract or military-related headline, we've seen the stock surge 15–20% in a single day. But when you step away from the hype and dig into the actual financials, the story becomes much more complex. Behind the flashy headlines, the company is still struggling to build stable revenue streams and profitability. In fact, their most recent quarterly earnings showed an 18% year-over-year revenue decline, down to $32.5 million, a drop directly tied to disruptions in U.S. Army programs. So while the market wants to believe in unlimited upside from defense spending, the real numbers show how dependent BBAI remains on a few government programs that can get delayed or reshuffled without notice. The bottom line is, Bigbear.ai is still not profitable. For Q2 2025, they reported a net loss of $228.6 million, a massive figure even after adjusting for non-cash charges like goodwill impairment. It's a classic high-growth but high-burn scenario where scaling the business is incredibly expensive. And that's the tug-of-war happening right now. On one hand, you have a massive growth narrative, a company at the center of defense modernization and AI decision-making. On the other, the hard financial data paints a picture of a firm still trying to find its footing. That's why BBAI has become what traders call a speculative momentum stock rather than a stable long-term investment. The volatility is no joke either. The stock's beta sits at 3.19, which means it moves more than 3 times as fast as the overall market. And if you've watched its chart lately, you've probably seen that in action. After spiking more than 16% earlier this month on the Check and Partnership news, Friday's dip was really just a natural cooldown. Trading volume tells us a lot too. The average daily volume sits around 117 million shares, and that level of activity is heavily driven by short-term retail traders and momentum chasers. Add to that a short interest of roughly 22%, and you've got the perfect recipe for sudden spikes and brutal pullbacks, the kind of price action that fuels excitement but also serious risk. But the real question we need to ask is, what happens next? Analysts covering Bigbear.ai currently have a hold rating on the stock, with an average price target of $6, notably below its current trading range. That's a signal that, in the eyes of Wall Street, the stock might be running a little too hot based purely on hype. Yet, the institutional data paints a more layered picture. In the second quarter of 2025, major funds like Vanguard Group and BlackRock added substantial positions, 14 million and 12 million shares respectively. That's not small money. It suggests that some big investors are thinking long-term and betting on Big Bear's role in defense modernization. At the same time, one big name, Industrial Partners LP, exited completely, dumping over 27 million shares. Moves like that remind us that institutional investors aren't united on this stock. They are divided between long-term vision and short-term caution. Even more concerning is the insider activity. Over the past 6 months, there have been 0 insider buys and 12 insider sales, including multiple transactions from the CFO. When insiders are selling during strength, it usually signals they think the stock might be overextended in the short term. So, what exactly does Bigbear.Ai do? Let's break it down in plain terms. The company focuses on AI-powered decision intelligence systems, primarily built for the U.S. national security and defense community. Its main software product, Conductor OS, is designed to process and integrate massive amounts of data, run predictive simulations, and help organizations make faster, smarter decisions. Big Bear operates through 2 main segments, government and commercial. The government side is the dominant one. That's where the majority of its revenue comes from, with contracts across the Department of Defense and other federal agencies. The commercial side, however, is smaller but growing. One of its notable commercial products is VeriScan, a biometric identity verification solution currently being used in airports to streamline passenger screening. This is an important area because it represents the company's attempt to diversify beyond the unpredictable world of government contracts. Here's the challenge, though. Being too dependent on federal contracts creates volatility. Defense programs can get delayed, adjusted, or canceled altogether, and that directly impacts revenue. The 18% revenue drop in Q2 was a perfect example of how that risk plays out. To build a more stable foundation, Bigbear.Ai needs to follow the path its competitor Palantir took, expanding aggressively into commercial markets. Palantir saw 47% year-over-year commercial revenue growth recently, proving that the model works when executed correctly. Bigbear.Ai's management knows this, and their recent $390.8 million cash infusion from an at-the-market stock offering is part of the plan to fund that expansion. It's given them a healthy balance sheet with more liquidity, but that move came at a cost: shareholder dilution. Roughly 75 million new shares were issued, which spreads out ownership and can put pressure on share price over time. Looking ahead, all eyes are now on the Q3 2025 earnings report, set to drop on November 10th. After missing revenue expectations last quarter, investor sentiment is cautious. Analysts are expecting a loss of around 6 cents per share, so even a small beat or an optimistic guidance update could easily trigger another price spike. But beyond that short-term catalyst, the long-term story depends on whether Bigbear.Ai can truly evolve. The company is well-positioned in the AI defense niche, no doubt, but turning that position into sustainable profitability is the real test. The U.S. government is pouring billions into defense tech modernization: drones, predictive AI, autonomous systems, you name it. And Big Bear is sitting right in the middle of that conversation. However, the ability to transition from a project-based contractor to a recurring revenue software provider is what will determine its survival. Another big factor is margins. In Q2 2025, the company's gross margin fell to just 25%, which is quite low for a software-driven company. If management can prove that margins are improving as they scale up their platform, investors will have a reason to stick around. But if losses keep widening and revenue stays heavily tied to government schedules, it's hard to see how the stock maintains its current price level for long. So, what should investors take away from all this? Bigbear.Ai's story is essentially a tug-of-war between momentum and fundamentals. On one side, we've got explosive price action driven by retail excitement, defense partnerships, and the broader AI boom. On the other, we have the undeniable reality of negative earnings, heavy cash burn, and dependence on a single customer type. If management can successfully diversify, improve margins, and demonstrate commercial traction, this could turn into a long-term winner. But until then, it's a speculative play with massive upside and equally massive risk. So, what do you think? Are you holding Bigbear.Ai, or do you prefer competitors like Palantir or C3.ai in the government AI race? Drop your thoughts in the comments. I'd love to hear your take on which company you think is best positioned for the next wave of AI-driven defense spending. And if you found this breakdown helpful, make sure to hit that like button and subscribe so you don't miss any of our future deep dives into trending tech and AI stocks. Thanks for watching. And as always, invest smart, stay informed, and I'll see you in the next one. This is not financial advice.